investment team tonight is made up of myself, Brandon, Dylan, and Julian. We've performed an investment analysis on JP Morgan, and our intrinsic value of the stock came in at $78.74, which is higher than the current stock price value of $65.45. So our recommendation is to buy.
So for this presentation, we'll be going over an introduction, the leadership, the organizational structure, products and services, some SWOT analysis, the overall financial position of the firm, the intrinsic values, and we'll leave you with an appendix.
So JP Morgan Chase is a leading global commercial and private banking, investment banking, and wealth management services firm providing financial services to individuals, to corporations, and institutions. It's the largest commercial bank in the United States. Its headquarters are in New York, and it has offices in major financial centers across the world. So its ranking by total assets, as just mentioned, it leads Bank of America, Citigroup, and Wells Fargo with $2.57 trillion. As far as its mission statement, it's doing only first-class business and in a first-class way. Its business principles seem to focus on exceptional client service, operational excellence, a key quote being, "We will always maintain a fortress balance sheet," a commitment to integrity, fairness, and responsibility, and a great team and winning culture.
And moving into the leadership, Jamie Dimon, he is the chairman, CEO, and president. He attended Harvard University. He joined in 2004, and he's been with the firm for 11 years. Stephen M. Cutler, he's the chief legal officer. He attended Yale University, joined in 2007, and has been with the firm for 8 years. Mary Ann Lake, she is the CFO, executive vice president. She attended Reading University, joined the firm in 2004, and has been a part of the firm for 11 years. Matthew E. Zames, he is the COO, chief operating officer, head of mortgage banking, and mortgage banking capital markets, attended MIT, has been with the firm since 2004 for 11 years. Nicholas Agazin, he is the chairman, chief executive of Asia Pac operations. He attended University of Pennsylvania, joined the firm in 1990, and has been with them for 25 years. And lastly is David Lee. He is a chairman, chief executive officer of JPM China, and co-head of Greater China Banking. He attended University of Pennsylvania as well, joined last year, 2014, and has been with the firm for 1 year.
Okay, so for the organizational structure of JP Morgan Chase, it's broken up into two main sections, which is consumer businesses and wholesale businesses. The consumer businesses is broken up to three more subsections, which are consumer business banking, mortgage banking, and merchant services. Their wholesale business section is broken up to another three main sections: corporate investment banking, commercial banking, and asset management. And the corporate and investment banking section is also split into two sections, which is banking and markets and investor services.
So as part of its products and services, in the consumer and community banking, it has branch ATM and bank accounts, credit cards, small business services, loans and alternative lines of credit, community development banking. In corporate and investment banking, it has brokerage, markets, and investor services. In commercial banking, it offers middle market banking, business credit, financing, and other lending. In asset management, it offers institutional asset management, investment management, wealth management. In corporate and private equity, it has treasury services, buyouts, real estate, and venture capital.
So moving into our SWOT analysis, some strengths. JPM is ranked second in the U.S. for banks by total assets. They're a strong brand name, and they have strong market presence. And they have over 200,000 employees globally, and they're present in over 60 countries. Moving into the weaknesses, they're heavily reliant on their U.S. revenues. There's been a decline in financial performance over recent years. And they also have a weak IT infrastructure compared to their competitors. Opportunities for them, continued growth in the commercial banking industry as U.S. unemployment continues to fall. Also, they have recent heavy investment into China and neighboring Asia-Pac markets. Some threats are changing government regulations, the current low interest rate environment, and the Federal Reserve may increase interest rates as early as June.
Okay, so the percent of total revenue for JP Morgan Chase. Investment banking section holds 31%, the investment management holds 14%, the commercial section holds 8%, the financial services hold 46%, and then corporate and private equity have 1%. Out of the $24 billion in total revenue, JP Morgan spent $11 billion on their financial services.
So looking at their financial condition, we're going to pick out some of the key ratios here. So their debt to equity at 2.66 is average. It is higher than Bank of America's, but average compared to the peer. Return on equity at 10.66 is excellent. Return on assets at 0.88 is as well as good to excellent when compared especially to Bank of America's 0.23 and the peer group 0.84. Its net profit margin at 24.41 is excellent compared to Bank of America's 5.97 and the peer top of industry groups 16.11. It has a trailing 12-month EPS at 5.46, a current PE ratio at 11.99, a dividend yield at 2.44, which compares favorably to Bank of America's 1.21, and is still good compared to a peer average of 2.90. Its enterprise value to EBITDA multiple of 22.24 is average compared to the peer top of industry group. Overall, their financial condition is good.
Moving into our first valuation method of the perpetuity model. Running the CAPM, we used a market return of 7%, risk-free rate at 2%, a beta of 1.6, which gave us a return on equity of 10%. We used that with the 2017 expected EPS of 6.59, and we came out with a $66 stock price.
For Gordon growth valuation, we ran discount rates of 8, 9, 10, and 11% against growth rates of 1, 2, and 3%. We ran 4%, but it seemed pretty high. We decided that the most accurate representation of Gordon growth would be running at a discount of 10% and a growth rate of 2%, coming out to $78.63.
So looking at PE multiples approach now, we use their current at 12, a high range at 14, a moderate at 13, a low at 10, all keeping in mind that the industry select group of including JP Morgan, Bank of America, Citi, and Wells Fargo came out at 18. So that's why we felt comfortable with going with our moderate at 13, and we used the forward-looking 2015 EPS at 5.84 because given their strong results in first quarter 2015, their trailing 12-month rose to 5.46, and we see 5.84 as not only achievable but very conservative. So that gave us a value of 75.92.
And moving into our discounted cash flow method, we grew earnings per share 2015 at 9%, 2016 at 8%, 2017 at 5%, and 2% into the future. You can see how we calculated our WACC with the weighted debt at 76%, weighted equity at 24%, return on debt at 8%, which is what we calculated from their 2015 quarter one balance sheet, return on equity of 9%, which gave us a weighted average cost of capital of 8%. Using this, we ran it at 6, 8, and 10%, and we came out with $83 for our stock price.
Okay, so the intrinsic value that we decided was we ran out a weighted average of 10% for perpetuity, 10% for recording growth, 30% for the P multiple, and 50% for the DCF. We ran 5, 15, 30, and 50, and a couple other ones too, but this one just felt like the most accurate. Again, our prices for perpetuity was $66, recording growth was $78, P multiple is $79, and DCF is $83. This came with a total weighted average of $78.74.
That intrinsic value gives us a recommendation of buy, with buying the stock on margin, writing put options, and buying call options. Thank you very much.